let's move on now and discuss some more interesting nuggets. Sunil, I'll start with you. Your best investment and the story behind it.
I actually can't take names, but I think Madhu has already mentioned a few. I think what basically we can say is that, the period between 2002 and 2004-05 was actually the best period for stock pickers. And the reason was that at that point of time, there was so much fear, because of the recent past at that point of time, which was between 1999 to 2002, that no one wanted to invest in any company, leave alone smaller companies. And I think at that point of time, companies were available at like 1 time cash flow, 2 times cash flow. But having said that, investments keep on coming. I think the best investment which gives us joy is the investment where we are alone as far as investment is concerned, when none of these guys are there. I think those kind of investments give us the most joy. I would say it that way.
Well, if you can name names, Navneet, what gave you the greatest joy? Which pick of yours?
I think it's not a sprint. I think it's a marathon. It's not about I bought that stock and that has gone up 20 times or 30 times. The proof is that over the last 25 years, if you compounded your money at 20%, I think that's far more important than getting too excited by, because I bought iShare, I can say we bought, my fund managers was an amazing great stock picker. At 600, he bought Page Industries, which has become 14,000, or he bought MRF at 2,000, which has become, it's not about that. I think it's the whole process behind it, and I think that 20% over a longer period is a lot more important than talking about some of those 50 times or 100 times, because there would have been some stocks where we lost money as well. Okay. Otherwise, the fund return should have been even greater.
Okay. Anup, some of these information is public, thanks to Dhirendra, of course, as well, and of course, a lot of other platforms. What's been your best investment? I mean, if you don't want to take name, it's okay. And what's the best learning out of that investment?
So we're all evading the question, as you can see, in terms of naming names.
That's why I'm trying my luck with all of you.
No, but, there have been many good experiences, many bad ones. I think and we sort of caught them and missed them sometimes for the same reason, oddly enough. I think some of the best ones we've made are actually at times of management inflection. Very often we've seen that's a very important variable. If there's a good business and there's a new management or somebody, there's some change at the top that has occurred, we've seen a lot of businesses actually start acquiring another level of momentum. So as long as there's the same business economics, but there's an added impetus of more drive, more ambition, more effort, we've seen a lot of interesting ideas come out of that. That's one. In terms of missing out opportunities, the ones that we've missed on hindsight are ones that I wish we had the foresight to see scale of opportunity. And I'll probably name one here. So HDFC, for instance, was a big miss for us over so many years. I mean, we've owned it at various points in time, but again, it would have been a great name to have just bought a long time ago and stayed through. But, in the 90s, there were high interest rates. You didn't really envisage what low interest rates could do to people, investing into houses and taking housing finance loans. So those are probably some big ones which happened right in front of us. But there will always be such opportunities in the future as well. So that's the beauty of our market. There's just so much entrepreneurship and ideas that keep coming your way that, I don't think we'll ever really run out of ideas.
Do you buy when you said that your inflection point is when managements change? Do you also buy when governments change?
I think, so governments play a role at a certain level. I think governments matter a lot for, we always say when you're looking at markets, if you take out all the noise, and there's a lot of noise, as we all know, in our markets. There's
CNBC is not one of them.
No, not CNBC, but generally events, let me say globally. But if you take out all the noise, the only two things that really matter are interest rates and earnings. And you have to have a view on that in terms of how you view the asset class. Earnings, of course, we all look at, and earnings are driven by corporates. But I think the government does play a role somewhere down the road in influencing interest rates. And for that, you need to have a proper budget that you're running, which, keeps inflation under control, et cetera, et cetera. And I think in the last 2 or 3 years, we're very happy with what we've seen in terms of the inflation and the interest rate environment. And again, that sets a very strong platform for equities through time. Because inflation and interest rates are the, big enemies of equities in a way, in terms of taking away return.
Okay. Nilesh, one investment where you told yourself, okay, I was contra. I was buying something which none of the others were buying, and you're happy about it today.
So that investment is my relationship with investors and distributors. I'll give you a live example. Very recently, one of my family member was ill, and I needed a connect in a cancer hospital. And I was not able to get through the right level. And then I called up a Parsi distributor saying that, can you help me in reaching out to that hospital and get me the right connect? I didn't accompany my relative ever to that hospital, but he accompanied my relative to that hospital and ensured that she was treated properly. So that's contra investment. It's beyond money. Those are the relationships which I have gained working in this. And that's the real wealth. Another example, sometime back I had gone to RPG House, and when we were entering, there was a watchman who kind of kept on looking at us, and we were too busy to notice it and went up because we were a little late for our meeting. But when we came down, that watchman was there saying that, are you Mr. Nilesh Shah? I said, yes. He said, I watch you on CNBC and I do SIP investments. And he showed his statement of account saying that this is how I put 1,000 rupee or 1,500 rupee a month. And that's where you realize that, okay, all these hours which you spent on CNBC is worth, because there is that person standing right at the bottom of the pyramid. He has become a long-term investor. And then I just send a mail to RPG Group saying that, if your watchmen are so intelligent, then I can really think what will be the ambition for your group. And this was RPG Harsh Goenka Group in Bombay. And they were actually happy to capture that and put it into their internal mail. And then next time when we all met Harsh Goenka, he said, because of my watchmen, so many other people have started doing SIP. So those are all the wealth which we have gained. You can call it contra investment, you can call it wise investment, you can call it anything else, but the love and affection and respect which we are getting from our friends, investors, distributors, advisors, partners, I think that's unbelievable.
More power to
Nilesh,
you, more power to the distributors, and more power to CNBC-TV18 as well. I mean, the kind of equity cult that's been created, that's quite good.
No, I think he just gave us his promo line for CNBC-TV18. And I hope the other fund managers are taking the cue from what Nilesh just said. Okay, well, on a more serious note, Sunil, what would you want to avoid as a fund manager? What are the things you want to shut out?
So I think we have done a lot of mistakes. One is obviously selling too early, as Madhu mentioned. I think a lot of times we get carried away because we are the first in it, and the moment the price moves up 2 or 3 times, you are very tempted to sell. We don't realize that after selling we are going to buy something else which might have also gone up 2 or 3 times. But because it's new, you tend to jump on it. In fact, that is what is also happening in the IPO market, because they are new. They are trading at significantly higher multiples than some of the listed stocks. So I think that is one thing which would definitely like to. And I think by nature, sometimes you tend to get too conservative. So I think that is a difficult trait to change, but that is something I would like to change.
Okay, Navneet, what's the biggest lesson market has taught you?
I think it teaches every day, and one of the most important quality, as you said, I think humility is so important. I think any time you start thinking that I have arrived, now I know, I think maybe you can be rest assured next quarter or next year will show you haven't. And I think that's very, very important. And in our whatever entire career, there would have been several moments where the minute you start thinking that you know everything, and that's the day you make a big mistake. So that discipline and that humility is very, very critical.
Nilesh, what's the biggest lesson you learned?
When we carry burden of expectations of people. We are not in the business of managing money alone. We are in the business of managing trust and confidence of people. So one thing I have learned that in 2008, when I was actively managing money, we had lost about 50% of clients' money. And okay, it was not on the actual value, but it was definitely at the notional value from peak to bottom. And in 2000, I remember when I was just a small fund manager, there were posters of fund managers on the street of Bombay saying that these are the people who have looted our money and they should be prosecuted. I don't know how many of you remember that, but in 2000, there were posters. There were agitations in fund houses to arrest fund managers. In 2008, we had lost far more money than 2000, but no one doubted our integrity. No one doubted our capability. If at all, wherever we have gone in that period, people actually gave us more money to manage. And that creates even further pressure in terms of trust, credibility. Whatever we do, we have to ensure that the trust and credibility is maintained on us. We are managing the trust and confidence. We have to manage it well.
Okay, before we start the rapid fire, Anup, your biggest lesson, it could have been from a mistake, it could have been from a great investment, but the biggest lesson that you have learned over the last many years?
I think, there was a nice saying I read recently which I think captures it, which Steve Jobs had said, which is simpler is much harder than complex. If you work hard enough to make things simple, then at the end of it, you're very clear. You have to really work hard to clear things up to make things simple. But once you get there, then you can move mountains. So simplicity of thought in investing, simplicity of thought in terms of how you approach the asset class. Don't complicate what you're doing through timing, through variety of noise, etc. Just keep it very simple, allocate money. As they say, Warren Buffett used to say, the best investments are like watching grass grow or letting paint dry. I think you have to keep life very simple, both investing as fund managers as well as, people investing into funds.